Trader's Edge. Now, Steve Rhodes.
Good morning from TFNN. Welcome to the October 20th magnificent and magical Monday edition of today's opening bell on the Trader's Edge. I hope all of you had a great weekend out there. I'm your host, Steve Perseverance Rhodes, and I believe that we should not be prisoners of our past, but instead pioneers of our future. So let's do everything that we can today to be pioneers of our future. And of course, one of the best ways that we can do this is to always remember that holding on to grievances, I know I can say it, that's a decision to suffer. You see, pain's inevitable. Each of us are going to experience pain. We can't stop that. But suffering, that's a choice. True story. For years, an old farmer plowed around a rock in one of his fields, and as each year passed, he grew more and more upset. Upset because that rock had broken a couple of plows, it had broken a cultivator, and it took up valuable land. So one day, the farmer finally said, I'm going to go dig that rock out. So he took out a crowbar and he slid it underneath the rock, and then he realized that the rock was only about maybe less than a foot thick. So he smiled and he said, hey, I can pull this out of here. He backed up his truck. He wrapped some chains around it, and he pulled that rock out of there. And as he was driving out, he smiled again. He smiled again, and he said, I wonder if there's other areas of my life that I'm holding on to similar types of thoughts, like a rock in the middle of his mind field out there. Now, some of us may choose to hold on to painful thoughts as if they were treasures. I say bury those treasures, folks. Those are not the kind of treasures you want to hold on to. Bury those, and that way you don't have to become a prisoner of your past, but instead a pioneer of your future. And I'd love to hear from some of the pioneers out there. Just pick up the phone, dial in at 877-927-6648. Internationally, 727-445-1044. Then together, you and I, we can go hunting for bulls and bears out there. It is Magnificent Monday. This is Tiger Financials Network. I'm Steve Rhodes, and welcome to the show. Right now, we got Dow futures off 97 points. They're trading out at 16,211. S&P futures off 4 points. They're trading at 1876. NASDAQ off 1 point right now, trading at 3803. The big culprit inside the Dow is IBM as we speak this morning. King dollar basically flat up 2 pennies. Not a lot of movement in the currency market, but we'll take a look at the currency pairs. Goldilocks up $6 right now. She's trading at $12.45. Silver up 9 pennies, trading at $17.43. Light sweet crude up 21 cents, trading at $82.96. Natural gas back just a bit. Let's take a quick peek across the globe out here before we begin taking a look at stock charts. See what we've got going on over in Europe this morning. A little bit of a hangover out there. The hangover inside the DAX is worth 132 points, off 1.5% out there. The FTSE down 0.9% off 57 points in Asia. A sea of green last night. How about this? The Nikkei up 4%. That's a move. 578 points to the upside. The Hang Seng up 47. That's only about 0.25%. The Shanghai up about 0.75%, under 0.75%, up 16 points. Okay. Should we begin with IBM? We probably should begin with IBM. So they're out with numbers before the bell instead of after the bell. They wanted to get the bad news out here early. Bad news, the stock is trading out at 168.55, last trade that fired out there. So the 168, 168.50 area is where it's trading into. Now, if we take a look at its last set of swing points out here, there is a high volume low. And it'll be interesting to see that high volume low took place October the 17th out there. The price of that level, let me move this right down in there. The price at high volume low is at 172.57. So you can see we're trading below that level right now. We'll see what happens on the open. The volume that is down there, and we're going to have a high volume day, that's for sure. We should. You had 22 million shares. So we'll see if IBM is able to hold that level. If it takes it out, it actually could be setting up a huge A to B equals CD to the downside. Now, with its weighting inside the Dow, that would be, oops, I didn't mean to draw that line out there. That would be double trouble. Let me put this on a weekly time frame out here. Might just be a little bit easier as we take a look at the stock chart and see where this could trade down to. Let's take a look at where that A to B equals CD could trade if it takes out those lows. And I'll assume that it'll have the volume today. On a weekly basis, that volume, by the way, is 45 million shares. So you can use today's volume as kind of a signal if it takes out that B point. Now, the 1-to-1 on this would be 155.68. but you gap down, which is what it's gonna do this morning. So if it gaps down, takes out that B point, you'd have to say 144 becomes more likely the level where IBM would trade down into. Now, what I also show on IBM, so this is kind of interesting here. If we take a look at the weeks of August 8th, 2011, August 15th, 2011, you may remember that the market made a pretty significant low, pretty significant bottom back in August of 2011. And the volume down there is pretty large for IBM, 56 million, 47 million shares. That also is right around that 155.88, that 1-to-1 A to B equals CD, to the potential A to B equals CD pattern to the downside out there. So what we need to do is watch, if IBM closes below 172.57, you'd have to say that 155 area really becomes its target out there. And that will go ahead and continue to put pressure inside of the Dow out there. It's not the only thing, but it will certainly put some pressure inside of the Dow. So that's what's going on inside of IBM. Other things that are moving here this morning, you've got Newlink Genetics. That closed at $29. They're having a nice trading early session here this morning. It's trading out at $36.75 out here. This happens to have, let me see if this is an untested high vol. Well, this is a weekly chart that I've got on my screen out here. Let me put this back to a daily chart. And let's go see what's up at that high out there. Well, this thing had a pretty nice run. It's off of the lows with a vengeance out here. Newlink Genetics. How about this? Big volume. That was on October the 14th. So maybe these guys are involved with Ebola. I don't really know what they are involved with, but looks like this is going to go make a run for its swing point high up in the $53 area. That was on February 25th, 2014. All right, let's go take a look at the futures markets out here and see what's going on. Actually, let's first go take a look at the DAX. It's off 1 7/10% here this morning. So let's go see what the DAX is doing. Now, the DAX is just pulling back. So the DAX has got this little morning star reversal pattern out here. That's a 3-day trading session in this case here that took place October 15th, 16th, and the 17th. What we know about the DAX looks very much like our markets as well. So the DAX here, take a look at the DAX. You got a couple of different patterns, competing patterns out here. Number one, the DAX is consolidating in about a 1,067-point consolidation. Now, it's taken out that consolidation low. It's done it with, well, I don't have the volume on it to let you know whether it's conviction or not. I'll assume that because our market's traded lower with volume, that the same thing is in effect here for the DAX. So you can subtract 1,067 from 89.84. Unless the DAX gets above 89.84, its message is it wants to trade 1,000 points lower. So that's about, 7,900 or so. The actual low that we've seen here is 83.54. Now, it's going to get below that 83.54. It's got to get below that morning star reversal pattern out there in order for that to come to fruition. However, at the same time, let's take a look at the DAX. Let's see how close this emulates what's going on inside of our market. If I come back, we can take a look at some retracement levels out here. Because if we take a look at the low out here from April 2013, if I go from that low to the high that was in, it looks just like our markets, just like our S&P out here. If we take a look at the June 20th high, in this case here in the DAX, what the DAX also did, if you're watching this on TigerTV, and I hope that you are, remember, it gets a live stream of this by going to the homepage of TFNN.com. Upper right-hand button, you'll see, well, first you'll see us streaming live on the homepage, but if you want to see the streaming live to your mobile device, just click on that button out there that should stream live to you. Of course, you can get us on TFNN.mobi. And if we take a look at it, you will see that from the lows out here on this chart, from the April lows, April 18th low, April 19th low, all the way up to the highs that were put in here, looks like right around the July time frame, that what the DAX did during this move down was it made a 0.618 retracement. Now, this has been a pretty, if I pull this chart back here even further, you can see that the DAX has been in one heck of a nice uptrend. In fact, if you come all the way back to its September lows versus our IBM's August lows out there. In fact, let me just take a look at that retracement just out of curiosity. What kind of retracement did we have that took place out there? Let's see, it's not as easy to see on here. Not even a 0.382 retracement. Okay, so not even a 0.382 retracement off that significant low. So here, if we take a look at the DAX, off of the lows out here on the bottom, what you're going to see that's missing, it's made one A to B equals CD to the downside. It has made one Gartley buy pattern, I believe. Let me just looking at this chart here. Yeah, only one Gartley buy pattern off that significant low. That Gartley buy pattern, that came in here on June 4, 2012. And what we just had here was the second Gartley buy pattern out here. You know, if you've ever missed a strong move to the upside or to the downside, in this case here, a strong move to the upside, what you're looking for is an A to B equals CD to the downside. And so you've got your second pattern out here. That's why it's going to be very interesting to see how the DAX trades. Now, if those lows get taken out, you can do nothing other than call that maybe it's second A to B equals C to the downside, and would also suggest that price would get down to about the 79.84. But we'll have to go with our and that actually that 0.786 retracement. That kind of coincides with our 1,067-point consolidation range out there. But not until those lows get taken out. So you've got a confirmed Gartley buy pattern inside of the DAX. And look, it is a one-world market. If we go take a look at our NASDAQ composite out there, we'll see the same thing. But first, let's go switch over and take a look at what's going on inside the futures. Let's go take a look at the daily out here. Let's take a look at the Russell 2000. Russell 2000, as you know, the story behind this, we're taking a look at a daily chart out here. It's been traveling in a 130-point consolidation. That 130-point consolidation, if it ever gets over its highs, 1211, that'll go ahead and complete its fulfillment of its 16-year consolidation pattern on the monthly chart or the daily chart, whatever time frame it is that you would be looking at. But right now, that 1,079-ish level is a key area for the Russell 2000. It got up over it on Thursday last week. It stayed above it on Friday, not by much. And right now today you're trading at about 1074 out there. So it's just teetering on in that area out here. So no real information. It's just really right on that line. We'll see how the market here trades. Today's trading session, I think, is a really important trading session out there. Hey, if we take a look at the NASDAQ out here, the NASDAQ, just like we took a look at on the DAX out here. Here's your A to B equals CD to the downside. Of course, the A point, that took place out here on September 19th. Your B point, that was down on October the 10th. Your C point was out here on October the 9th. It made a 1 to 1.618 A to B equals CD to the downside. It, too, formed a nice bullish reversal signal. Right now, it's just trading at its point of control. So even though IBM with some bad numbers out here, not a lot of technical damage here in the NASDAQ. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of TigerTV, TFNN has brought our programming to the next level. With TigerTV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on TigerTV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out TigerTV, then visit TFNN.com and see what you're missing. Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow futures off 125 right now. S&P off 6.5. If we go back and take a look at the NASDAQ here for a moment, I'm going to go back to the daily chart. Now, what I did was I just simply went to the continuous contract out here. And what you'll notice is off of the lows back here from April 2013. So it's a long time. April 2013. We're in October 2014. And if you take a look at this very strong move up here, the NQ on it, it's a daily chart that we're looking at. It's really only provided with one A to B equals CD pattern to the downside out here. That one Gartley buy pattern is really what I'm trying to say out there as well. And that's the pattern that took place out here. It took us into the lows back in April of 2014. So what actually took place last week is the second buying opportunity if you were going to take a look at Gartley patterns. And Gartley patterns are when you've missed a strong move up or a strong move down. Just depends on whether you're trying to sell the market or buy the market. And what the NASDAQ here, it's giving you the second A to B equals C to the downside, the second Gartley pattern out there. We'll see if, in fact, that can hold out there. So all the pressure, or the substantial amount of pressure, really coming from IBM out here. So we'll see how that thing pops at the open. I'll repair that chart a little bit later. And really, you got the same kind of patterns here. Let me take a look at the S&P futures out here right now. S&P futures on a daily basis. Really, you've got the same pattern out here. If we take a look at that, give me a moment. Let's take a look at the A to B equals CD to the downside. Inside the S&P futures, the September 19th, that's your A point. Your B point is October 2nd. Your C point happens to be this retracement into October 6th. You'll see an exact 1 to 1.618 A to B equals CD to the downside. That is where price stopped on October the 15th. That was last Wednesday. That was down around the 18.13 level. The actual price projection there was 18.15.27. Little sideways day from a body standpoint of a candle and a move up here on Friday. And at this stage here, it's until these lows get taken out, you got to go with the Gartley buy pattern. You've got a confirmed Gartley buy pattern out here. Let's go take a look at what's going on inside the currency market out here. Let's go take a look at what's going on inside the euro. You've got the euro, which has changed its trend. It's really not up that much. It's kind of flat as we speak right now. But if we take a look, this is a 10-minute chart. Let me put this on a daily time frame out here. Well, we know when we were taking a look at the euro, we've seen some A to B equals CD patterns up off of the bottom out here. The euro wants to head up to at least this trend line. That is the white diagonal line coming across my screen out here. What that should do is that should put some weakness inside of the U.S. dollar index. Price range right around the 1.307-ish area. If I do go back to a intraday time period, let's go back to a 10-minute time frame chart out here. What we can see is the A to B equals CD up pattern. Now, this on this 10-minute chart out here, this takes us back to October. Today's October 20th. There's several. Let me pull this back even further. Let me see here. Yeah, there's several A to B equals CD patterns that this has made to the upside out here. Now let's see what this is doing to the downside here this morning. If there's anything out here on a 10-minute chart worth noting. Not really. Not really. Yeah, it backed off after making this A to B equals CD to the upside. Your A point down here at about 2:50 a.m., your B point out here at about 4:10 a.m., and your C point down around 5 a.m. Well, it has not completed that. That's looks like that's what the euro is really trying to do, is get up into about the 1.27996-ish type area out there. Again, the currency market relatively quiet out here. The euro, Japanese yen. Let's go take a look at that currency pair, see what it is doing. I'm going to pull this back to a daily time frame as well. Now, the euro, Japanese yen, as you know, tracks our market better than any other currency pair. What it's done is really what our market has done. Kind of interesting. If you come from its swing point high, September 19th, when did our markets make a high? September 19th. You come down to a low out here, October the 15th. That happens to be the low inside the euro, Japanese yen. You don't think this currency pair is a carry trade that has something to do with our markets out there? Yeah. You think that's just a coincidence that September 19th was a high and that October 15th was a low out there? It's the power of the currencies out here. That's why we want to go ahead and pay attention to them. And what has the euro, Japanese yen done? It's made a 0.382 retracement. Got up to the 136.85-ish area. It did that earlier this morning out here. Now it's backed off a bit. You typically let people off of the elevator when you get to that first floor. That's really what's going on inside the euro, Japanese yen. At this stage of the game, it has not fallen apart or anything. This is Steve Rhodes. This is TFNN. We'll be right back, folks.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or TigerTV streams. We say you can.
Now let's go over to the dollar, because the dollar is going to be the generator. It is the generator of basically higher dollar, lower market. And what the dollar has done, and this whole uptrend, folks, has just gone sideways. The way it works, folks, is this.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
To the races. We got the Dow off 98 points, trading out at 16,281. S&P off 3 at 1884. Composite down 6 points, trading at 4253. Russell 2000 off a point and a half. She's trading out at 1080. To the downside, we've got IBM. International Business Machines, that's trading up $13, trading down 7%. Mead Johnson Nutrition, MJN, is its ticker symbol off $4.75. NCR Corp, NCR, the ticker symbol, that's down 14% off $4. Chimeric, CMRX, off 7%, down $2.40. Lakeland Industries off 10%, down $2. Oracle off $1.60. Google down $1.11. CSX Corp down $1.35. Las Vegas Sands off 84 cents. To the upside, it's New Link Genetics up about 20%, up 550. We took a quick peek at that before the bell. You got Cleco Corp, CLECO, up 10%, up 480. Tesoro, TSO, up 6%, up 350. Shire PLC up $2. QEP Resources, QEP is the ticker symbol, up 7%, up $1.56 out there. Covidien up $1.11. Marriott International, MAR is a ticker symbol, up 3%, up $1.75. Gilead Sciences up $1.16. SanDisk up 2.5%, up $2 and change out there. Key number to be watching today, I'm thinking 1880.25 is the number inside of the ES Mini. 1884 for sure. You get above that, and what you should expect is a bullish outcome and a continued move higher inside of the S&P 500. Now, we've guys, as I was pointing out, we've had huge legs up in the market. And, you know, if you were to go study, if you believe in H.M. Gartley's work out there, which I do, right? You got to figure his book was written in when, 1935, something like that, right around 1935, I believe. And, you know, if you take a look at those patterns out there, extremely strong patterns. And whenever the market has missed a move, whenever you've missed out on a large move up, and you're looking for some of the best places to get in, well, if you utilized his system as one of those systems, you would absolutely look for an A to B equals CD down pattern. And that's exactly what we got inside the market. Now, what we also got, which is cool for both the bulls and the bears out here, is last week. If we take a look at last week, I'm going to put the Rhodes momentum trading charts out here. So if you're watching this on Tiger TV, what you're going to see is first, as we take a look at the upper portion of my chart here. So I've got the chart broken down into two halves out here. The top portion is the weekly. The bottom portion is the weekly. It doesn't often happen like this, that you get such clear signals as far as where the bulls and the bears are. But if we take a look at last week's candle session inside of the S&P 500, what we will see is that we formed a hammer candle on a weekly basis. The S&P doesn't form a lot of hammer candles on a weekly basis. I'll find another chart that I can put up, and we'll go looking for hammers on a weekly basis inside of the S&P 500. But here's what we know about last week. And because it formed a hammer candle, the S&P, if it closes below that level, what you're looking at is a very large A to B equals CD to the downside. But what we most certainly know, you can call it Fed, you can call it whatever it is that you want. What we do know is that the bulls have supported the low. Inside the S&P cash, that price point comes out to 1820.66. Now, what's interesting about the S&P 500 is not only did it give you a very bullish signal on a weekly basis, that includes an A to B equals CD to the downside, that includes a Gartley. Now, on the weekly basis, we didn't have a Gartley buy pattern. But we do on the daily chart out here. And what we also had at that low on a daily basis out here was a hammer candle. So we got hammer candles buckaroo out here, and those are important to be paying attention to as we take a look at the S&P 500. It's the S&P 500 as well as the New York Stock Exchange as well, right? So you got the New York Stock Exchange, the wider swath of the market. And what the New York Stock Exchange did, now not on a weekly basis, but what it did on its daily chart out here is it created a hammer candle as well. So that says that low on October 16th. That is muy importante. That is very, very important for that level to hold out there. Now, what the New York Stock Exchange did, as I believe you know, on Friday, is it turned bullish. We haven't seen a bullish move inside the New York Stock Exchange since September 3rd or something like that. We'll take a look at that as well. But let's come back and let's take a look. Let me put out let me find I've got a weekly chart here somewhere. Here's a weekly chart. Let me put up the S&P 500 out here. Give me a moment to do that. Let's go see if we can find any other weekly hammer candles out here. You know, what I'll do is let me pull this back just away, see if I can find any other weekly hammer candles. It's really strong. It's the largest here. Here's a weekly hammer candle. Last time we had one. How about this to coincide with the fear that's out there in the market? Remember, Stevie is talking about a huge bottom in the market, not a small bottom, not a tiny bottom, a huge bottom. The kind of bottom where we go up until the beginning of the new year, till Christmas. It's called the Santa Claus rally, just simply coming a bit early. And before the market was cascading down, if you were to say, hey, what pattern would it be that you would be looking for in order to buy the market? I think many of you, well, at least if you studied H.M. Gartley's work, you would have to say, hey, I'd be looking for one of those Gartley buy patterns. They tell you a lot if they fail as well, and you'd be looking for signals, and that's what the Japanese candlestick charting tools provide for us. Now, I can't guarantee what the market is going to do out there, and I'm not doing that. The last hammer candle on a weekly basis that we saw, though, how interesting here is that happened back at the August lows, where IBM is basically trading back into, I believe, August 2011 was the last time. The week ended here was August 12, 2011, when we saw that hammer candle. Now, that hammer candle was tested. Happened to be tested back here on October 7th, the week of October 7, 2011. Maybe that's what takes place. I don't know. I can tell you that today, if the market's traded above 1884 inside the ES Mini, you don't want to be short. If it gets back below 1884, that's a different story out there. But above 1884, save your shekels and, save your shekels out there. Boy, to put this back even further on a daily base, on a weekly basis, I need to add some more bars here. So let's go ahead and do that. We'll go see how important these hammer candles are on a weekly chart out here. Let me see if I see any other ones of any significance out here. Looks like, pull this back here. Was there another weekly hammer out here? Yeah. Oh, yeah. By the way, how did I miss this? February 7, 2014. How about that? There was a hammer candle right there that also formed inside of the S&P 500 out here. So you got the 200-day, 200-week. It's on a weekly basis, so that's but in essence, if you were going to take like a 200 weeks, that level was held out there. It certainly was not 200 days inside of the marketplace out here. Let me pull this back just a bit further, see if I see any other hammer candles, because a hammer candle that fails is also of significance out here. So that's why that low from last week is so important. And it's great signal for, again, in my opinion, for both the bulls and the bears out here. So as I pull this back, the last time we saw a hammer candle fail, it looks like on a weekly basis, happened to be in September of 2008. And that's just how important that hammer candle from last week is. Will it do the same thing? I can't tell you. But the hammer candle that failed the weekend of September 19th, 2008 out there, that's what ended up leading to those March 2009 lows. So that's on the hammer candle. That's on the S&P 500. Let's go take a look at something else out here. Let's go see things that are moving and grooving out here inside of the marketplace. So actually, let's go back in and check in on IBM. So let's check in on IBM, see what it's doing. You've got the S&P's turned positive. The composite's up 14. Russell's up 6 points as we speak right now. So, if IBM can't blow it apart, maybe only Apple can, right? Is Apple, I think they're out with earnings today after the bell. Maybe somebody in the den can give me the thumbs up on that. I don't want to give you bad information, but I think it's today after the bell is when we've got IBM out there. So IBM is off of its session lows as we speak right now. It's trading out at the 169 level. What was it on the, let me put the weekly chart back up on my screen. It was the 172, I think, is the area. Right, this is 172, the price point. Yeah, 172.57. So if we can get back above that, it will have the bulls will have somehow saved the day inside of IBM. So we'll see how this whole thing plays out. Let's take a look at a couple things, as I say, that are moving. Let's look at some things. Right, IBM reported. The question is, when does Apple report? Is Apple reporting today? Let's go take a look at Regeneron Pharmaceuticals out here. If we take a look at Regeneron, let me go back and change this to a daily time frame out here. Yes, after the close. Thank you so much. You got Apple after the close today. We'll take a look and see how Apple is trading. But if we take a look at Regeneron Pharmaceuticals on Friday, trying to take out a B point with volume out there. That B point is September 2nd. The high is 369.31. Volume at that trading session was only 1.5 million shares. You did 2.4 million shares on Friday. Now, it did not close above 369.31. Did it? Close no. Oh, it did. 369.64. It did close above that with volume. So you've got a confirmed A to B equals CD to the upside inside of Regeneron Pharmaceuticals. Ought to take it to 419, maybe even 447 out there. Looks like that is the move underway inside of Regeneron Pharmaceuticals. Even though it's trading a bit lower here this morning, not a big deal out there. How about NCR Corp? Let's go take a look at National Cash Register out here. I didn't even know they were still around. My apology for not even knowing that. Of course, I don't know. I'm not sure what they do out here. National Cash Register. Not a lot of cash registers these days. That would be kind of interesting. If we take a look at what it's doing, I can tell you what it is doing. It's broken out a swing point, a B point, with some volume. Well, I can't tell you if it's done with volume. It's gapped down with some volume. 10 million shares on April the 30th. It's down here today with already 2 million shares. So to a certain extent, it's gapped down with volume. So where's this thing pulling back to? Let me switch over to a little bit larger time frame here. Let me switch over to the weekly time frame. And if we take a look at the weekly time frame, do I see any volume out here? Yeah, it's trading right back into this session, which takes you back to August 13, 2012. So it ought to head at least to, well, let's take a look at the A to B equals CD to the downside. Let's take a look at that projection out here. The A point being the weekend of October 21st, 2013. The B point being April 28th. The C point being a retracement up into June 30th. There was about a 35% retracement. Pretty good chance this is headed to 1930 to 1482. That high volume bar that I was looking at out here, it takes you really, there's a couple of them. One would take it to the price level of 25.52. No, that's not it. You trade inside of the low is 22.06. So 22.06 should be in the cards. And then you've got the weekend in February 6, 2012. That high is 21.55, may act as support. The low of 18.63, perhaps more likely where National Cash Register, NCR, is headed to. If we take a look at Meade Johnson, MJN is the ticker symbol. Let's go take a look at this on a daily chart. Right now, Meade Johnson is trading down 4%, trading off $4 and change out here. Quite a wide-ranging bar out here. So this has a untested. Well, let me pull this back. Yeah, that was a 52. That's a all-time high out here, 104.89. So this is an all-time high made with volume, big volume last week. That was 7.6 million shares. So, it's given back some of that here, but that high is going to be should be tested again. That's out at 104.89 out here. Meade Johnson, let me put this on a longer-term time frame here. Let me see what the monthly looks like for ticker symbol MJN. Yeah, that's a little bit of a skyrocket, is it not? Yeah, the month's not over, but yeah, that's a doji candle, but that doesn't mean a whole lot. Let me see. Did this take out a B point with volume? The B point I'm looking at is June 1st, 2012. That had 40 million shares out there, and it was taken out with no light volume, but this month here, because it did come back and it didn't really test that level. But just to see here, even this month it's a little bit light, 23 million shares. Monthly, maybe not so much. But the weekly, let's take a look at the weekly chart out here, see what the weekly chart is doing. Maybe that took out a B point with some volume out here. Let's take a look at the B point on this on a weekly basis on Meade Johnson is June the 8th. Ended weekend of June 8th, 11 million shares out there, and that was taken out with 10, almost 11 million shares. So, and then did it test it? Yeah, no, close. Last week here, we're going to have to give it the benefit of the doubt. Last week was 12 million shares out there. That is on ticker symbol MJN. Let's take a look here at some things to the upside. How about Annie Lennox? Boy, what a great vocalist she is she not? I didn't know she had a public company. The ticker symbol is LII, Lennox International out here, up 9% this morning. Up $7 and change. So let's go see what Annie has in store for us. No, I'm just kidding. It's not really Annie Lennox, but I couldn't pass up the opportunity out there. If we take a look at it here, gapping up, this thing looks like it may be trying to change its trend out here. It looks like at one time we were looking at a potential A to B equals CD to the upside. Let's take a look at Lennox International. So this thing here made a confirmed, it had an A to B equals CD pattern to the downside. Let's go take a look at it. The A point out here was back on March 10th, 2014. The B point down on May 20th, 2014. And the C point that we're going to use on this is July 23rd. Looks like I screwed that up. So I'll have to do that A to B equals CD to the downside when we get back for Annie Lennox, LII, gapping up this morning. This is Steve Rhodes. This is TFNN. Right.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy, a set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days, unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
Welcome back, folks. We were taking a look at Lennox International before we went to that last break. That A to B equals CD down pattern that it completed. The A point was back on March 7th, 2014 out there. Your B point was down at about 81.88 on May 20th. Makes a retracement, makes a 0.786 retracement. That was on July 23rd. Goes ahead and completes the 1 to 1.272 A to B equals CD to the downside. Now it's gapping up. If we take a look at it with some pretty good volume behind the move out here. In this case here, this thing moved higher with some accelerated volume on Friday. 1 million shares, already done 416,000 shares, so that's got some additional follow through. If we take a look at retracements from the swing point here on July 23rd, just the C to D leg is all I'm looking at. It's gapped up into the 0.618 level. 84.70 was that number. So for it to maybe just rest around here would be kind of natural. Just some letting some folks off of the elevator. That is on Lennox. If we take a look at also moving to the upside out here, let's go take a look at Netflix. So, you know what I said we would do? We'd take a look at Apple, right? Because you got Apple after the bell. So let's go do that. AAPL. Let's go see what Apple is doing out here. See how this is trading. So it's up this morning. And what Apple has done, this is the daily chart we're looking at. So what Apple has done is it's tested this high volume bar, this high volume low, which was the trading session of September 9th, had 189 million shares. And this was tested last week with only 100 million shares. So you have a failure on price and volume inside of IBM. Now, that low was 96.14. It was tested again on October 16th. So what's that make it, Thursday? And it closed at 96.26. 96.26 versus 96.14. So you've got 2 days of a test of that swing point low with lighter volume and a failure to bust it down. What does that say? If you can't bust them down, it should go try to bust them up. So no idea how the market is going to respond to Apple's numbers after the bell. What we do know is if somebody knows something, if traders know something, you've got a high volume low, in essence that's been tested, that has been rejected in IBM, then it couldn't bust it down. It says that what it should do is try to bust them up. In the case of IBM, busting them up means trying to get all the way back to that September 9th all-time high out here, and that's at a price level about 103.74. We'll see. We'll check back in tomorrow. We'll see. Did the stock chart know something? That was a stock chart giving us a clue as to what Apple wants to actually do out here with regard to its stock patterns. I don't know, but we are going to find out. That's for sure. Now let's go back and take a look at Netflix here real quickly. Netflix is got this big, huge, what Netflix could do, hasn't done out here, but it could take place tomorrow. I don't know that Apple is going to impact Netflix out here. But, you know, what Netflix did, gap down hugely with big volume on October the 16th, 13 million shares to the downside. But it's actually setting up the potential for one of your more bullish patterns out here. That would be an island reversal. So if it could gap up, you could have a island reversal bottom, which, by the way, and this one, and Netflix, the island bottom would have more meaning than this one here, this one meaning the diamonds. But the Dow diamonds last week did form an island reversal out here. If you take a look at the gap down here on October 15th, the top of which was, the high was 161.85. The low of the prior session was 162.50. If you take a look at the low of the trading session from October 17th, that low was 162.21, and the previous day's high was 161.95. You've got a little bit of a gap out there. So even with IBM getting crushed out here, the Dow Diamonds actually have one of the most bullish patterns that you could find in the marketplace, an island bottom reversal. Folks, it is Marvelous Monday, Magical Monday. Thanks so much for starting your day with us here at TFNN. Have a great day. I look forward to seeing you soon. Take care now.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
You're watching Tiger TV.